There it is. Universal Studio. Wow.
Wow.
That's right down the street from me.
I got to get some chalk though, Pete. I don't have any chalk. You got to write on there, take 305.
Yeah, you got to do episode X and this, that, and the other. And
Jared, your job is to go back through and count up all the episodes.
Awesome. Thanks.
Yeah, that ought to be easy.
That should be fun. Welcome to the Rebel's Edge, folks. I am John Najarian. Pete Najarian and I are the co-hosts of the Rebel Edge. And of course, we've got Jared, who is our executive in charge of production.
Does an unbelievable job.
Doing an unbelievable job too, Jared.
He's like our Robin Quivers or whatever, right, John? I mean, the guy, look at.
My job is to laugh when you tell a joke.
He's sort of the Ed McMahon of this production, I guess.
Oh, you are.
Oh, yes, so great one.
The problem is, John, Jared and his whole gang don't even know who that is.
No, they don't. He's going, you mean the guy from those Publishers Clearinghouse ads?
Yes, same guy.
I'll Google it. It's
Folks,
fine.
We will hopefully break down some cool stories for you and provide just 1 minute of macro, because if you've been watching TV today, you've probably heard hours of macro and things about the Prime Minister of Great Britain's family and all kinds of things that can really help you make money. But we're just going to give 1 minute to macro. And Pete, I'm going to start with China. It's just China, China, China. Doesn't matter about Great Britain. We're talking about 60 million people versus over 1 billion people that now have a leader that is the most powerful since Mao, and maybe even more powerful now because they're more of an economic power.
Yeah, and I would agree with you, John. I would also say outside of China, if I was going to go one other direction, I would just say look at the dollar. And I say that because of this. When you go back to Friday, John, we jumped all the way up to almost 114, and then we dropped like a sack, and we got all the way under 112. That's when the market took off. We've talked about this inverse relationship. Today, what's happening with the dollar? It's pretty much nothing. It's sitting there underneath that same level. So because of that, we're seeing a little bit of a rise, at least for the Dow. We've watched the NASDAQ go all over the place, but the Dow itself has been up for the majority of the day, but it's been up and back down and then up and back down. So a little bit volatile for sure. And volatility is still there, by the way. That's it. That's the macro minute.
And did Pete say dollar or
dollar?
Dollar?
Let me tell you, the dollar. All my New York buddies say that.
Yeah, just like China or China.
They added an R, and there is no freaking R there, John. I mean, I don't understand that at all, but whatever.
Let's talk about China, Pete, because U.S. listed China-based companies that you've been telling people, really, folks, stay away from these companies. The only way you should trade them at all is with options, and that's because you can define your risk. I think people would have been wise to listen to you then, Pete, and they're probably feeling foolish that they didn't, if they didn't, because some of them are down over 20% today on fears that Xi Jinping may indeed put more curbs on the ability of these companies to be truly capitalistic.
Yeah. You know, the policies, John, and the continued policies that he has had certainly do play into this for sure. All you got to do is look at a couple of those names, because you and I have talked about this for a long time. You do not want to own these names. You may want to trade these names, but if so, trade them with the options. And the reason I say that is you just don't know when it comes to the stocks themselves, how these things, they can literally just say, you know what, we don't think we want to trade that way anymore, so we're not going to allow that. That's what they can do. But all that being said, John, when you look at something like a Baba, right? I mean, Alibaba, Baba is the, BABA. It was 310 back in October of 2020. And today it hit 58. So that gives you a little bit of an idea of where this thing has been, where has it gone, and where is it now? It's unbelievable, down 15% today. PDD down about 28% today. It gives you a good sense, John, of just how much pressure is on a lot of these various names.
Yep, I agree, Pete. And this is, I'm not going to say it's a don't touch, but I am going to say just like Pete said before, do not own this equity, folks. Only own the of a rebound. You know, Xi Jinping relaxes a little bit, but if you're owning the equity, that drop that Pete described, where it fell basically 5/6 of its value, vaporized, that's not a position you want to be in. All right, Pete, let's talk about Google, also known as Alphabet. Earnings tomorrow after the bell. They're expected to earn about $1.25 on $54 billion in revenue. We've got Snap, which really snapped last week when they didn't have positive things to say about earnings or earnings going forward. Do you think that bodes well or not well for Google?
Well, John, I think the real answer to that is, it's a bit of a read through, but let's be honest, Snap is not Google. I mean, everybody wants to always put these things together, right? And say, well, they're kind of in the same world and whatever. No, they're not. Snap is Snap, and it's kind of run its course. We know exactly what it looks a lot like Peloton, straight down. I mean, it's melting like an ice cube out here in Florida where I am or where you are. But I think that the reality is, John, they are slowing. This is not the growth company it once was. And because of that, when are they going to ever make money, John, for instance, in cloud? I don't know. The revenue keeps going up, but they don't make any money. That's a bit of an issue. YouTube's growth has really slowed. It's like somewhere between 5% and maybe 7%. So there's a lot of different aspects of this name that I think are going to be very interesting to hear on the call. But that being said, I don't think we can read through and say, well, Snap did this, so Google's going to do that. I don't think they're even anywhere in the same ballpark.
Yep. And one thing I'll point out, folks, is that we are at a double top. And what is a double top? Well, if you're a technician, you already know. A double top is where you look at a chart and you draw a line across. And if that line happens to be right where the stock is right now, Pete, at about 102.40-ish, that's $102.40. That's where it was on October 6th. And we've come all the way back up to that level, Pete, after being down below 96 or so. So it needs to break out. Tomorrow after the bell, it needs to break out, or that's going to be resistance above and it'll break back down. So hopefully tomorrow on the show, we'll be able to break down a little bit more of that. What about Meta, Pete? This is Facebook, of course, just like Google. These guys have been having the benefit lately of all the firms are moving up their targets because this one's been slaughtered. I mean, I remember when this one was over $400, Pete.
Yep.
And now look at where it is. It's a quarter of that. You lose 75% of your value. Yeah, people are going to be nervous. And earnings are Wednesday, not tomorrow, but Wednesday after the bell. $1.87 is what they're looking for. Revenue of $27 billion. But Pete, it's going to be about the metaverse. Just like the top of the show was China.
I don't disagree with you. Brad Gerstner, John, from Altimeter, has had some really interesting comments of late talking about this. He's a big shareholder, I believe. And he's been talking about the fact that, hey, look, they're spending too much on the metaverse right now, so they need to cut back. And he's talking about $5 billion a year. That would be a pretty significant cutback, John, from the money that's been flowing into this name. So that's something. He also talked about maybe getting rid of some of the staff. He thinks they're way overstaffed at Facebook, Meta, whatever you want to call it. So I think that there is a lot of this push and pull going on in this name. I still love the name, John. I think the core business still makes an incredible amount of money. You look at what their free cash flow is, it's absolutely off the charts. That's what's financing the metaverse at this point in time. But can't they use some of that money somewhere else? I think that they can. And they've got this great free cash flow. When you look at their cash to debt, this is a great looking company. But the problem is everybody's looking at Meta, and Meta's a long way away from pay dirt. And I think that's going to be the problem. People are still going to look at it, John, and quite honestly, it's still out into the future. So I think that's going to be a problem, an overhang probably for a while. But maybe they can change the narrative on the call.
Yeah, I'm thinking, Pete, that Zuck is probably listening. He doesn't like to be told anything, I'm sure, just like, most of these so-called self-made men. They worship the maker. I got to believe, Pete, that He is hearing it loud and clear, though, that spending $5 billion or $10 billion and a quarter on Meta, the metaverse that is not where they should be focusing their energy right now. The metaverse will be big, but Facebook, Pete, has only gathered 200,000 people into the metaverse, and that's out of over 1 billion that use the platform.
Right.
Those percentages just don't hunt.
Right.
But unlike Google, it doesn't have that overhang of a double top. So if you get a chance tomorrow on a softer day, I think I'd be a buyer, Pete, a nibbler just like you.
Mhm.
I would buy it, and my target is 140 in the short term for that.
Yeah.
All right, let's hit the fourth stock that we're going to hit, because that's what we do every day, folks. We break down 4 stories of the day. This one's PCVX. I talked about it in the pre-market today, Pete, when it was up 30%, then it was up 40, then it was up 50. Now it's up 66%. They've got a pneumococcal conjugate vaccine. Say that 3 times fast. And they've made it through trials 1 and 2. Now they're going to that critical phase 3, Pete. That is going to be what makes or breaks them. But it's $1 billion company. This isn't one of those that's like $10 million or $20 million like you see in the micro caps. This is a real company, but boy, they can't fail on this test.
They can't, and oftentimes they do. We all know that. And I'm not saying this name specifically. I'm just saying in the biotech world, you get through phase 1, you get through phase 2, and then you get to phase 3, and then maybe you get through. But you don't absolutely automatically get through, and that's what a lot of people just have to understand. This is a stock, John, that's gone 70% today to the upside, hit fresh highs over 36. It eased back just a little bit. But what an unbelievable move to the upside for all the right reasons, understanding exactly what the risks are, though, going forward. I would say this: if you were somebody who was lucky enough to catch this thing before today and you actually had this ride, take some of it off. I mean, you know, that would be the discipline that you and I talk about all the time, whether it's in options or in stocks. And in this case, we're talking about options because these are options that potentially do basically come to an end, and they come to that end if they hit phase 3 and don't get through. So I think you'd have to take off a little bit right now, but great company. It's really interesting what they're doing. And John, by the way, they've already traded 10 million shares in the first, I think, 2.5 hours of trade. It normally trades about 470,000. So it gives you a little bit of an idea of how actively people are getting involved in this name today. Pretty interesting, and it definitely stands out. I think this is a really cool one that you highlighted today.
Well, and it's one of those, Pete, like I say, it's pushed from that $1 billion valuation on this 70% rally to over $2 billion valuation. So could there be a time when they need to go to the public markets, Pete, to raise more money for some of these other drugs in their pipeline or whatever? Time will tell. I agree with Pete. I would take profits because pigs get fat, hogs get slaughtered. All right. Let's give you a quick look, folks, at what's going to be going on in Miami, Florida, December 8th through 10th. We've got a special one-on-one opportunity for those of you who can make it. Take a listen and a look.
Introducing our new series of intimate in-person trading conferences in some of the greatest cities in America. It's Market Rebellion Live. First up, this December in Miami. Level up your trading with help from Pete Najarian, AJ Monte, Ryan Mastro, and Bill Johnson. Miami is limited to just 25 seats to ensure every guest gets personal attention. So act now. Tickets are going fast.
Bang, we're back. Make sure, folks, that if you want to attend, you go to marketrebellion.com/Miami. That's marketrebellion.com/Miami. It's a great time, but there's only room for 25 people in this particular event. So if you want to join us, move your game up to that next level, meet a bunch of people who either trade for a living or just love to trade. They're rebels like you and me. Well, then check it out, December 8th through 10th. What a great present for that person in your life that really loves trading. If indeed it's not for you, maybe it's for them. All right, Pete, let's take a look at unusual activity. I've got this high yield bond ETF, HYBD. That particular ETF was 72.25. And this morning, somebody bought 20,000 of the November 66.50 puts. Now, those are $6 under where this one is. So if you think that the Fed is going to continue to hit us with pain and that the high yield bonds are going to be going down, which means yields go in the opposite direction, yields go up. Well, this is a trade, 2 million shares worth, Pete, at 66 means, $130 million potential control to the downside of this company. That's why I jumped on this one, but I didn't jump on those. I bought the at the monies, Pete, and I sold the out of the monies against it 1-to-1 because that's how I like to trade.
I like it too, John. And I think you're explaining exactly the way we see the information. We don't have to go exactly where they are. We don't have to do the exact same style of trade, but it's giving us at least some ideas of what some of the bigger players are looking for. I got one for you with Las Vegas Sands. We started off talking about China. We're going to continue to talk about China because this name specifically is down as hard as they are, John, because of what's going on in Macau. They think it's going to continue to be just as brutal as it's been over the last couple of sessions with Xi, and they've got another one coming. So that's really the focus right now. That's why the stock was down about 13% today. It was underneath 34. They're buying the 34.5 calls, John, that expire on Friday, October 28th. They bought 3,500 of those for about 85 cents. They sold the 37s for about 25 cents. Another spread. You could do that. You could do anything you choose to do if you actually buy into the idea that maybe there's a little bit of a bounce here after this pretty harsh sell-off that we're seeing, not just in this name, but throw in Wynn, throw in Melco, throw in all of these names, all getting slammed to the downside today based upon the news about China and what's going on politically. So because of that, it looks pretty interesting, John. I like it. I'm in it. And I like the idea of, at least risk reward wise, it's not very expensive, gives you an opportunity.
I agree. And boy, Pete, this is one that a lot of us have been waiting for that turnaround to come. Vegas is mostly back, and Las Vegas Sands is not a pure Vegas play anymore. You've got some that are, but like you said, Melco, a lot of the Wynn and the people that are over there in Macau, if there's things that Xi Jinping is doing to hurt various businesses, it's a question of, okay, but for how long? And will he take his boot off their neck? And this would be a cheap way to play for that. So I am with you in the trade, Pete. I'm buying the at the money 33.50 strike in hopes that we do see that bounce. All right. You guys know that Pete also on his weekends does a sports talk radio show called The Sports Huddle. It's on the Odyssey Network and WCCO in Minneapolis. So, Pete, I'm going to let you start it off with what you're seeing in the NFL this week.
Well, I think this is kind of fun, John, because of the fact that it sort of brings you back to Minnesota in a way. This is the Herschel Walker trade 2.0. And what do I mean by that? Well, the Seattle Seahawks managed to figure out a way to find some chump, the Denver Broncos in this case, to take Russell Wilson, who, by the way, is fading, and nearly gone. I mean, this guy, 5 touchdowns, 3 interceptions, that's his production. They have the lowest scoring offense in football, John. They put 14 points up per game. We're already getting, 6-7 weeks into the season, and we're looking at a team that's scoring 2 touchdowns a game in a league that is made for teams to absolutely score much more than that because everything is in favor of offense. Can't even touch a quarterback anymore. If you walk by Tom Brady and blow on him, that's a penalty. I mean, that's how bad the NFL has gotten. Geno Smith, who, by the way, is now the quarterback for Seattle and the starting quarterback, you know what he's getting paid? $3.5 million a year. You know what Russ is getting? $165 million guaranteed and a $260 million contract, and he's put up 5 touchdowns. I'm looking over at Geno Smith, John. He's got 11 touchdowns and 3 interceptions. He's throwing at 73.5% completion. The guy is doing everything right. Oh, and by the way, part of the trade as well. So Denver gave them a first and a second round pick this year, a first and a second round pick next year. And then they also gave them a number 1 pick quarterback, a number 1 pick tight end, and a defensive tackle who's actually a very good player as well. So they gave them the Herschel Walker side. They literally just completely took these guys to the cleaner. Absolutely unbelievable. And Seattle is starting to look, maybe it's a little early, but starting to look like maybe they're already getting dividends from that trade now. They certainly are at quarterback, John, because Russ is no longer the Russell Wilson people used to love.
And the same was true with the Herschel Walker trade, Pete,
Yeah.
just as you detailed. The Vikings picked him up. My gosh, I don't know how many 100-yard games Herschel had, but it wasn't many, Pete. And all they were was a passing team. The Vikings, we're talking Dante Culpepper, Pete, throwing the ball up to Moss and to AC and to all those guys. And all of a sudden you say, one thing that Pete always emphasizes, folks, is how many plays you can get in a football game and how much you can control the clock. Mm-hmm. Well, you want to keep the ball away from the other team. You can run the ball if that's the kind of team you are, or you can throw the ball a lot more to the tight ends, which Pete always picks on. But my gosh, to sit there and say, we're a team that likes to throw the ball 45 times a game and we're going to trade the world for Herschel Walker. Did you all of a sudden get 2 footballs? How are you going to make that work?
Yeah. Isn't that true? Second one, John, we're going to jump to some college football. How about that? LSU. Right. Everybody wanted to bury LSU. Boy, I'll tell you what, they paid all this money. They steal the coach from Notre Dame. They do this, they do that. And well, John, if you take a look at that team right now, they are 6-2. They're going on a bye week. They got Bama coming up. And then after that, Texas A&M will be a competitor. There's no doubt about it. But I think if I'm right about where LSU is now compared to game 1, I think this is a completely different team. They've got a quarterback down there, John. This kid, Jaden Daniels, who transferred from Arizona State. All he's done is throw 12 touchdowns, 1 interception, 70% completion, 1,800 yards, and the guy is lighting it up. Oh, and by the way, he's also the leading rusher on the team with 500 yards rushing with another 9 touchdowns. I think just about every quarterback in football should be looking at this guy saying, you know what, since most of us are going to get an opportunity towards the Heisman since we're quarterbacks, how about this guy getting an opportunity? I know last week, John, I was talking about, well, maybe we can slide in somebody else. Maybe we'll get this guy or that. They're going to do quarterbacks. We all know that. Keep an eye on this kid, Daniels, because he had a decent career with Arizona State, but he is lighting it up now, John. I think it's a lot of fun. It's fun to have him in the Heisman hunt. And there's nothing better than watching a good LSU football game down there in the valley. The stadium is rocking. You know Louisiana better than anybody. Those guys know how to party. They know how to make a lot of noise, and they love their football. They love their football. And I'll tell you, that kid's a heck of a quarterback. And I think the coach is starting to show people, you know what? He's a pretty good coach as well. He was good at Cincinnati. He was solid as all get out at Notre Dame. He just didn't have the right kind of help around him at Notre Dame. But he's doing pretty well so far at his start at LSU.
Yeah, and Pete, another LSU quarterback, Joe Burrow, I was watching him yesterday, and I think he threw for 5 touchdowns yesterday. That Boyd, I think it was just killing it. That kid was catching everything he threw up. And Chase, of course, is Chase. So, they're loaded over there at Cincinnati, I think, Pete. They're on that comeback trail to try to get back to the Super Bowl. The only bad thing is, of course, best team in football's, they got to play them in order to get there, the Buffalo Bills. But I do like what they're doing, Pete. I like the idea that we've got such competitive teams, even though these guys lost early on. So did Oregon. Did you think Oregon would ever come back from the huge embarrassment they had
shut out
with Georgia? Yeah. Well, take a look at them now. They're a top 10 team and they're just crushing it, and nobody wants to play them. Nobody. So I think that's another look what they did to UCLA. That was one of our teams that we thought was ready to move to the next level. Turns out they were posers. And Oregon is the one that's at that next level.
And John, I got to admit something. I still think Penn State's a poser, and that'll show this coming week. But Minnesota, my God, that's my alma mater and everything. But these guys were 4-0. They were ranked. They were doing everything right. Number one in offense, number one in defense. They did it all, including a Big Ten game against Michigan State. They were ranked in the top 10 or 11. And now I'm looking at them, John, and Michigan State turns out they're pretty awful. So our win really wasn't all that good. And all we've done is lose, lose, and lose. And it's really getting sad. So, sometimes posers against posers, one of them's better than the other. Penn State, they got the better of my Golden Gophers. So good luck to them at Ohio State. That's going to be interesting.
Oh, my gosh. Well, folks, we will be back tomorrow with the Rebels Edge at 1 p.m. Eastern Time. I'll be back later today with 3 at 3, which airs at 3 p.m. Eastern Time. I hope you tell a friend about the program. I hope you liked it. And you'll see our links for our Twitter accounts as we sign off. So thank you for joining us today. We'll see you tomorrow.